Welcome to CRE Newsroom.
Today is Wednesday, 29th of April, 2026. Hong Kong investors are continuing to offload prime London offices, with One St. James's Square now entering a second round of bidding from major institutions. Fraser Group has moved into the UK outlet centre market, reportedly paying around £400 million to acquire two designer outlets in York and the East Midlands. And lastly, CBRE is bringing the Range's £67 million sale and leaseback portfolio to market, a 10-store, long-term, inflation-linked income opportunity aimed squarely at institutional investors. At the heart of London's St. James's district, One St. James's Square is now into a second round of bidding after Hong Kong-controlled owner Lifestyle International put the landmark office building back on the block. The property, originally purchased for £250 million in 2020 in a sale and leaseback with BP, is being marketed as a rare freehold asset in one of central London's most prestigious garden squares. Several big-name institutional and listed investors are understood to be circling the site, attracted by its super-prime location, redevelopment potential, and the prospect that this could be one of the last major trophy office blocks to change hands in that immediate neighborhood for some time. This interest in One St. James's Square sits within a broader trend of Hong Kong-controlled owners exiting high-end London office assets. In the past 2 years, two other prime St. James's Square buildings, 1112 St. James's Square and 3 St. James's Square, have also changed hands, all of which were previously owned by Hong Kong investors. Beyond the West End, Hong Kong-listed Link REIT is also weighing options for its Grade A Canary Wharf acquisition, the Cabot, at 25 Cabot Square. Link bought the 17-story, 480,000-square-foot office building for about £380 million in 2020 as its first UK office asset, citing its freehold status, strong tenant base, and Canary Wharf's connectivity. More recently, reports and market commentary have suggested Link is considering an exit or partial sale of the Cabot, reflecting broader pressure on global REITs to manage leverage and refocus on core markets. If it proceeds, such a move would join a growing list of Asian-owned London offices being returned to the market. At the same time, Canary Wharf is seeing a gradual but noticeable pickup in leasing activity. In the past few months, several high-profile deals have been reported, including interest from global payments firms and other financial services tenants looking to consolidate or upgrade their London footprints. On the development front, JP Morgan has secured a key planning and height-related agreement to build one of Europe's tallest office towers at Canary Wharf, backing a new £3 billion headquarters scheme. That project, if fully executed, could anchor demand for large-scale office space in the Docklands for years and may influence how investors view the risk profile of existing Canary Wharf office blocks such as the Cabot. Before we move on to the next story, if you're finding this useful, please subscribe, like, and share this with someone else who follows the market. Your support really helps me continue producing these commercial real estate updates.
In our second story today, we turn to a significant expansion in the UK retail and property sector. Fraser's Group, the retail powerhouse founded by Mike Ashley, has officially completed the acquisition of two outlet destinations, York Designer Outlet and East Midlands Designer Outlet. The deal, valued at about £400 million, acquired from Aviva investors, further solidifying its growing influence, not just as a retailer, but as a major institutional landlord. Fraser's Group is a UK-listed retail conglomerate, best known as the owner of Sports Direct, the discount sports retail chain founded by Mike Ashley in 1982. Over the past 2 decades, the group has expanded far beyond sportswear, acquiring brands such as House of Fraser, Flannels, Game, Jack Wills, and Evans Cycles, and rebranding from Sports Direct International to Fraser's Group in 2019. The York and East Midlands outlet deal is part of a broader strategy in which Fraser's Group has become an active buyer of designer outlet centers in the UK. This follows the group's earlier purchase of Swindon Designer Outlet in late 2025, signaling a clear intent to consolidate presence in the value-oriented branded outlet segment.
The next is a retail investment news. The Range's £67 million portfolio sale and leaseback, brought to investors by CBRE. The Range is a UK-based value retailer, specializing in home, furniture, garden, pet, toy, and general household goods, typically operating out-of-town units in retail park or edge-of-town locations. As of 2026, the chain operates well over 200 stores across Great Britain and Ireland, making it one of the larger furniture and home improvement-focused value chains in the UK. CBRE is marketing a portfolio of 10 Range stores for sale and leaseback, with a headline value of around $67 million. The properties are spread across regional and suburban locations in England, Wales, Northern Ireland, and Ireland. CBRE said all assets in the portfolio will provide a 15-year lease term with no break options. Institutional players, like pension funds, REITs, or income-focused funds, can view this as a yield-oriented, low operational hassle asset class.
That's all for today's update. Thanks for watching, and I'll be back with more CRE and capital markets news in the next video.